Welcome to the Fintech Founder Journey, where we explore fintech and the founders that power it. We look at how to build better fintech products, better fintech businesses, and how to work on yourself to be more successful in all that you do. I'm your host, Mike Scott, and I'm also the co-founder and CEO of Nona Digital, an expert firm that accelerates product development for fintech and blockchain startups. In today's show, I'm joined by Dan Silver, co-founder of Stake, and we'll be discussing his journey and insights into building and scaling a high-growth fintech platform in the investment space. Today's episode is sponsored by ourselves, Nona Digital. Working with us to accelerate your fintech or blockchain product, you get access to a deeply skilled and experienced design team and development team that have been building products for a very long time. You get the benefit of a team that is big enough for no key person dependencies to exist, but small enough so that you're always close to the principals. And you get the benefit of our reusable component library, which basically means we're able to launch your fintech products sooner than anyone else could at a comparable standard. To get in touch with one of our principals directly, head over to nona.digital. And now onto the show. Today, I'm joined by Dan Silver, who is the co-founder and COO of Stake, which is a platform that lets you trade the US stock market from outside of the US with no brokerage fees. Their core markets are Australia and New Zealand, but they're now also in the UK and Brazil and growing really fast. They raised $40 million earlier this year in May, and the team is about 80 and growing quickly. They've got about 350,000 users on the platform and have close to $1 billion under management. This is a company worth watching for sure, and I'm excited to learn more. Welcome, Dan. Thanks for making the time, and it's great to have you on the show.
Thanks, Mike. Great to be here.
Cool. So let's start with you, all about you. So before we get into the business per se, but tell me about your journey. I mean, from my stalking on your LinkedIn profile, it looked like you have got a master's in finance, so it's certainly not far away from your skill set, but you spent a lot of time in insurance from what I can tell. So tell me about the sort of progression from working in insurance to having this idea and now building a really fast growing scale up. Talk to me about sort of that transition from uni into working world into, hey, I want to build this thing and I think it should exist.
Sure. So I'll actually go maybe a bit further back before I go there. So growing up, I worked in a family business. It was a hospitality and restaurant business. I'd spend all of my sort of school holidays, uni holidays working in restaurants, whether it's on the high street or on the beach, and just in hospitality. And that sort of just it was great because you basically learn to sort of how to deal with customers, good customers, difficult customers firsthand when you're young and you don't really have a care in the world. And I love that business because it's cash in, you get your money in straight away, and then you have to you get your margin and you pay your suppliers and your OPEX, and you got a little bit of profit at the end of it. So that was sort of how I grew up in that sort of old school business. And then from there, I actually went into accounting into the city for a period of time in the UK, and did that for like mainly during university and a little bit after, and went into consulting. So I did the master in finance. I actually did a science psych undergrad, master in finance, and then did consulting straight during uni and straight after uni as well. And then from there, I sort of wanted to get a bit more back into business rather than being in the advisory side. And so I went into Wesfarmers, into their business development, corporate development team. And they're the great opportunity. You're working for one of the largest companies in Australia, and you're really working with the management teams to drive their divisions forward. So I worked in their insurance financial services business. And you're working on whether it's acquisitions in the space, looking at strategy. So really around business strategy, how you're going to drive the business forward, what's happening in the space. So it was a great experience for me working there. And with that, I actually had opportunity to go into different business in Australia and the UK with them as well. So that was really sort of the grounding, the springboard for me. But really after about 10, 12 years in corporate, I was really getting that itchy feet to go and do something a bit more opportunistic and a bit more sort of entrepreneurial. And I was looking at different opportunities. So as you said, whether it was in the insurance space, I was even looking in the hospitality space as well. And I was speaking to Matt, who's my co-founder and one of my old friends. And we started talking about just why is it so tough for people to go and invest their money into the markets? Like why? Like if you want to go in and buy a share in Australia, then great, you're well stocked. But if you want to invest in any other products or overseas, it's really awkward and tough and expensive. So that was really what started it, and that was really the problem that we wanted to solve. And that's really where it started with Stake, and that was in 2015. We started having conversations, the end of 2015, and then we formed the company 2016 and been going ever since.
And I think that's such an important point there, Dan, because you said it almost like by the way, but it's probably because it's just second nature to you. But starting a business off the premise of there's a thing that's really difficult and we could make it easier is a great premise to start a business. And not every business is started on that basis, right? Businesses are often started on like, how do we make money, or how do we create a thing and then try and sell it? But when you're creating off the premise of something that exists that's a pain point, and you're confident that you can reduce that pain or reduce that friction, it's generally got a better chance of success, which is what you guys have done so well. So what was the original hypothesis? So you guys are, at this stage, you're not sort of, you've got experience, you've worked for 10, 12 years with big business as a consultant. You're certainly not sort of straight out of high school or anything. What was the hypothesis that you set out to prove when you and Matt were sitting, I don't know, at a bar over some beers or over a kitchen table, wherever it was? What was the thing that you set out to prove or wanted to set out to prove or disprove right at the beginning? This is before you've raised money or anything. You sat there and you went, shit, this is a horrible experience. We can make it better. Okay, but let's make it smaller and break it down into a thing that we can prove or disprove. What was that thing right at the beginning?
I suppose, first of all, we sort of backed ourselves that there was going to be demand for this, and that was initially anecdotally from our own experiences and also from speaking to friends and family and people in the industry, that being able to access opportunities should be something that's available in financial markets, is something that should be available to everybody. And for those people who want to go and access the world's largest share market, which is the US share market, which represents 40+% of the world's market cap, for people outside the US, that was very difficult. It was paper-based and extremely expensive, even if you could manage to do it. So we had personal experience of trying to set up accounts with all of the major brokers, and it pretty much took us 4 to 6 weeks to get the account set up in the first place before you could even place a trade. And when you placed a trade, you felt like you were being screwed because you're paying through the nose for it. So that was really, so we came from it from a personal experience, first of all, and also from like looking at the whole solution and like seeing the apathy in it. So when you spoke to people in the space, they were just like, well, that's just the way it is. Like, no, you want to go and invest overseas. Well, you just have to go and suck it up. And so we were seeing, obviously, with the advent of the, like all these great e-commerce and technology businesses, and admittedly, this is like 5-6 years ago, but that were coming up and doing great things and changing the way that people interacted and focusing on the customer and really, and we're like, well, you don't need to be a genius to realize that there's an opportunity here. And what we then started to do is we're like, okay, great. We understand that that's what we want to try to do, but is the technology advanced enough in the industry for us to be able to come up with a solution as well? So it's all very well to know that there's a problem and then be like, okay, let's go and solve it. But you're still reliant on incumbents to help you to solve it as well. So then, and will you be able to get them over the line? And, these guys, they generally don't like to deal with, small guys with big ideas. So how do you actually go and is it even possible to put it all together? And so that's really what we spent the time doing is okay, well, who are the partners that we can provide the seamless customer experience, but beneath the, what are the rails that's powering this underneath that we need to work with?
Yeah, which is a challenge, right? Because you aren't even in control of all of those things, as you said. You need some of the slow-moving incumbents as part of the puzzle. So you've got to be there's things out of your control that you need to factor in. So it's not even like you're in control of the entire experience. You have to rely on other systems, which is more of a challenge to get this right. So Crunchbase tells me that you guys did a seed round in August 2019. Crunchbase is sometimes inaccurate, so if that's incorrect, you're welcome to correct me. But you started the business in February of 2016. So that's, what is that? That's 3.5 years. Tell me about like what happened before that seed round. So I think if I remember correctly, the seed round was about $3.5 million. But there were 3 years before that. Like, how did you get from, right, we're starting this business in August of 2019 to the point where you raised $3.5 million to actually build out the tech or whatever you used that for? What did that early period between we're doing this and that first seed round, what did that look like? Tell me what you were doing. Tell me how you were sleeping. Tell me what you were spending your days on.
A lot of self-doubt.
Yeah, tell me.
A lot of people questioning, like, what the hell are you doing? It's a lot of pressure, to be honest. You've got to have a very, very strong belief system to be like, no, I'm adamant that, this problem I'm going to solve, that my solution is solving it more and more every day, and the problem's getting bigger and bigger.
Yeah.
That comes with you've got to have a lot of self-belief to do that. But you do get you question yourself along the way. But in practical terms, when we launched the business, we basically put a small amount of capital into the business to just support it on an ongoing basis. Obviously, we're taking, none or peppercorn salaries to support it. We've got a few developers that are having to pay. We work closely around trying to get, government grants and how can we actually go and manage cash flow. Our first 2 offices were basically squatting in people we knew, just areas of their floor in unglamorous parts of Sydney. You're doing whatever it takes, and every dollar that you're putting into the business, you make sure it's accounted for. So we did that. We put some money in, and we then we went to immediate family just to support us over the first couple of years. Really, immediate family and friends. Before we actually went and did a proper external round, which is the seed and for $3.5 million that you mentioned.
Would you advise the same for a startup? Thinking back to 2016, would you advise the same thing specifically? So there's a lot of debate that I certainly see. I get asked a lot, like, Mike, we've got this idea, we have a great business plan, we might have even built out a sort of rapid prototype. Nothing that it doesn't do anything, but it's clickable and it can demonstrate. Should we go and raise funding now to build our MVP, or should we somehow beg, borrow, steal, family and friends, build out an initial version, get a little bit of traction, and then raise funding? And the answer is not necessarily obvious, right? Like, your valuations will be higher if you've got some traction and you've proven it, but then again, you've got to get there. So if you could do it again, would you do it the same way? Would you self-fund, beg, borrow, steal, get yourself to that point, or would you have tried to raise money earlier off a business plan and a better cash flow projection or something?
Yeah. I think hindsight's a wonderful thing. So there's a lot of things you do differently, but I'm pretty happy with where we are now. So I also, I came from it that we came from it from the angle that we're our biggest critics. So that we're not going to go and we're not going to get our kudos from getting money in the business. We're going to get our kudos from getting customers in, and we're going to go and listen to customers and do that. So anything that would help us to go and do that is what we should be focusing our time and effort on. But it also meant that by doing it this way, that there was stuff that we probably wanted to move quicker on or do other products that maybe we didn't get to. And actually just the focus on single products, because you've got constraints, is actually really useful. So I think that the fact that, we couldn't go and hire, 5-10 developers, that was actually a really positive thing in the first instance, because you end up not being able to manage the process. And sometimes you get carried away. You're like, okay, great. Now we've got the money. Now we've got to move faster and build more. That's not what you need to do. You just got to get more customers. Because that's really what that's the lifeblood of the business. So because we had that attitude, it was like, okay, how do we actually use this resource? And the other piece that we did is that we realized quickly that, especially being a $0 brokerage business, so people who with Stake, they can go and buy and sell shares in the US without paying any brokerage, which is pretty innovative in the market at the time. So, and it was actually pretty innovative outside of the US. There was nobody really doing it outside the US. But what that meant is that we had to find ways to monetize as well. So because we needed to get revenue in to support our cash flow so that we could make sure that we didn't need to necessarily go and raise. So I think if you put all of that together, it was absolutely, I would do the same thing again. I would make sure that you're very discerning about what you choose to build and who you choose to bring on and what you choose to do from a product development side, number one. Number two is be aggressive in terms of support you can get from whether it's government grants and the like. And number three is we were able to get a revenue model up and running from day one, which meant that we had revenue coming in to support some of our expenses.
Man, there are so many gems there. I mean, number one, the goal is not to raise funding. Like, the goal is to get customers and get traction, right? And I think that's important to stipulate, because I think people get a bit obsessed about raising funding. That's not the goal. The goal is to get customers and get traction. And you do that by building things that people need. Number two that I heard from you is, you didn't say these words, but it reminds me of a guest that I had on the podcast previously, who's actually a client of ours, and they've got a very, very large fintech scale up. And he spoke about, like, in the early days, it's all about efficiency. It's all about, like, you've got all these constraints and you've got to be really discerning about what you build, what you focus on. It's really good. And, you were speaking about that. And the interesting part was they've now raised, I think, just over 100 million. And he said, when you scale, it flips. It actually becomes about inefficiency. It's really interesting. It becomes about, like, you need to actually shift your whole strategy, because you're not going to find innovation at that high growth stage if you're being super efficient. The innovation comes from inefficiency. Not wastefulness, but inefficiency. And that whole transition I find really, really fascinating. And I heard you speaking about that now, is in the early days, it's actually really useful and healthy to have pretty big constraints, because you become hyper-focused and you're very deliberate about what you're building, which is really interesting and impressive, hearing that that's how you guys did this. And it's no doubt that you raised, I'm guessing relatively easily when you did go and raise, because by that stage, you would have had a pretty compelling story, because, as you said, you were your biggest critic. So by the time you got in front of investors, I'm guessing you could probably answer all of their questions, because you were asking them of yourselves in that 2-year period before you actually took it to investors. So something we spoke about in the pre-interview, Dan, and I just want to dig into it a bit now, is this question of a technical co-founder. So there's a massive shortage of developers, and especially senior developers, and even more so what we'll call like technical co-founder level developers, right? So people who can not only understand the tech, architect the tech, but actually lead the technical elements of a business, which is quite rare these days. You guys don't have a technical co-founder at the moment, but you've had an experience and you've had a journey there. So why don't you share with us your opinions on how important it is to have a technical co-founder when you're building a fintech, and secondly, what your experience and journey has been on that front?
Sure. So yeah, when we started the business, we started it with John, my co-founder, as our CTO, and he it was an amazing ride in those first few years. To be honest, it was literally like we'd do whatever it takes to go to sort a customer out or have to fix a problem with a partner. It's literally like a 24/7 operation, especially when you're dealing with a product where most of the action and the activity and the events happen throughout the night here. It puts much more pressure. If you think about it, like the number of times I get a call or I'd be up at 2-3 in the morning just because we have to go and solve whether it's a customer issue or a database issue. It's that you're never going to forget those things, all the war wounds. To start with, it was an amazing experience doing that and working through that process, and really, and that was really just to get the product off the ground and to get some level of scale and to get literally it's just every customer is super important. It's like and every partner and every issue is okay. You've got to go and put a Band-Aid over here, but then something over here breaks because you've done it. So it was those are the great times, to be honest. In a way you sort of get the energy and the adrenaline pump from those times much more than these times. It's different. So and then really after about three and a half years. So John left the business. But that was all, as I said, it was very much like just a different time and stage of the business where it's gone from being, it was really scrappy to start with. And, there's different constraints as well. Like you've got to go and make sure that you can, it's a tough environment. You're not getting big salaries. You're having to put money into the business. So it was really at a point where, we can, it was probably, there were people in the business that could support it, and he'd done a great job to get it to that point. So it was just the right decision at the time for that.
Yeah. So the hiring market at the moment is nuts, right? We have clients all over the world, Australia, the UK, the US. Most of my team is in South Africa. It's just everywhere, right? The hiring market is nuts. And when you're talking about fintech, trying to find expertise that has fintech experience as well is even more nuts. Which means that, if I think back to like 3 years ago, for example, a lot of the larger scale-ups would just have purely in-house teams because they could find talent, they could bring talent in. It wasn't as difficult. But now we're seeing a trend where companies who previously would not work with outsourced partners are kind of forced to, because if they want to have a 200-person strong team, they're just not going to be able to hire that. They might hire 70 or 80 or maybe 100, but they've got to partner up to bolster capacity. And at a certain scale, one of the biggest challenges is building fast enough for what you need to do. So you can't wait for that lag time. How do you, because you guys are definitely in that high growth scale up phase. You've just raised 40 million. I'm guessing you'll probably raise again in the not too distant future, and it'll be bigger, and you're growing, and you're multinational, you're global. It's I'm sure you're in a massively accelerated environment. And I'm also sure that part of your constraints are, can we build fast enough? And I just want to know, how do you think about capacity for your product development? I'm sure you've got a core team inside. I'm sure it's a very capable team. I'm sure you're trying to grow that team. I'm also guessing you're not growing it as fast as you would like to, because nobody is, from what I can tell around the world. How do you think about optimizing that capacity and not giving away your IP, but also not hindering your business because you can't hire fast enough? How are you thinking about that whole sort of challenge at the moment?
Yeah, no, that's exactly what we're finding. I think we're in a position where we know that there's huge value that we can create, but you've got to be there's a piece around you got to continue to prioritize. And even if you've got more resources, you still got to prioritize. But just it's never gonna take away from the whole prioritization piece. So the fact that we feel constrained in terms of product and development resourcing, it's actually I think it's actually a good thing. Because it means that that you're adding value in what you're doing, and that the opportunity cost is quite great to not do it. So got to push harder. In terms of how we're actually approaching it, so there's a few things. So first of all, we are scaling the team, and we're doing so in every market really that we operate in. So we've got a development team primarily based in Sydney, and we've also got a development team in Sao Paulo in Brazil. So we've got a office over there, which is our own office, where we've got our products, development, operations, customer service, and also we've got customers over there. So it's not just a service center; it's also a growth business as well. So that's one thing is that we actually have a global talent. We got global teams in global offices. Outside of that, we are looking at how flexible are we with bringing people on board in terms of work from home, work remotely. You come in with a stance around it, but then you have to, the practical reality is you've got to adapt as the conditions adapt. And if you're only recruiting in one market, which is currently under lockdown, and you've got a lot of other big companies that are competing for talent, then you're not going to get very far. So for us, it's also looking at, employee value proposition. What's the, when people come on board, we've got options in the business that we offer. So we're just going through that, but there's obviously a lot more that we are looking at beyond just financial. And then looking at which markets. So as I said, two offices at the moment, but we've got people in about 6 locations globally, whether that's in Europe or New Zealand or in Gold Coast, as well as in Brazil. So that's what we're looking at, is how do we actually scale those teams?
Yeah, completely. And, in the pre-conversation, I remember talking about positioning a little bit, and I was talking to someone about this morning, actually, that positioning it's one of the hardest things to get right in business, right? Just from a marketing perspective, like positioning your business right, which you guys have done very well, is incredibly difficult. But even further than that, it's not just positioning for the customer, it's also positioning for potential talent, and positioning your business in such a way that makes you more attractive than the other guys because of how you've positioned your business from a talent perspective and an attractiveness is really important. We've noticed that since we started focusing on fintech and not just being kind of a generalist development firm, we got a different sort of interest from the market. And I'm talking about from the talent market, not just from the client market, is that you've now got developers that are going, hey, actually, I'd really like to work for you because I'm really interested in this element of DeFi or this element in payments or this element of what have you. And I can get a job in 3 places, but I'm interested in this thing. So that's critical for us. And, I think for your business, it's very clear how you're positioned. And I think it's kind of self-selecting, which is quite cool, is that developers that want to work with the stuff that you're doing in the investment market, into the US market, helping people to access this from other parts of the world, there's, to the right person, there's quite a big draw there over and above just like, this is what you're going to earn, these are the perks, and this is the culture, which is so important to be conscious of that as you're building a scale up.
I agree with that. It's you've really got to work through, like, what we find is most of our staff are Stake customers. So they're ones who are already using the app. They're doing it. That's what our lifeblood's been. That's how we've grown to where we are, and that's how you retain your culture, because people who come on board are the ones, they're building the product for you as customers. They're the ones that understand the pain. They know they know the problem that we started with 5 years ago. They live and breathe it. So if you can harness that and bring it on board, then that's the biggest asset any business can have.
Yeah, 100%. That's so cool. To be able to have a business where the things that your people are working on is a thing that they use often. That's pretty cool. It's a privilege to be able to do that. So Dan, you've kind of touched on this a little bit, but I just want to ask the direct question. So, as I said, the way I view your business is you're absolutely in the growth stage. You guys are in the scale up stage and in the growth stage. You've got product market fit, and now you're going for it. How are you thinking about product development? Like, what matters most to you? When I say to you, cool, Dan, as COO of this business, product development is pretty important. What are the first things that are coming to mind in the stage that you're in when I just say, how are you thinking about product development?
Yeah, sure. It's a big question. So, and the first thing is we start with the customer. So we're trying to understand what are they looking for? What utility are they looking for from Stake? Why are they actually using our products? Why are they using our business? Why do they like us? What works? What doesn't work? And the product, what you need to do is you need to understand your strengths and your weaknesses. And they could be from your existing product set, or they could be from, the weaknesses could be stuff that you don't even have yet. So it could be, for example, even in product development, you're looking at whether it's the ease of use of the product, or it could be around trust and security. So it's like, if you try to understand, well, what are the things that you over-index in and what do you under-index in, then what you do is you try to compensate for the ones you under-index, and you sometimes try to go harder on the ones you over-index. So for us as a business, what we find is that what what our customers tell us is they love the customer experience. They love the feeling that they're part of something that is innovative, and that that we'll act in their best interests. So it's like, how do you actually go and continue to evolve that with everything we do? So for us, it's like, we look at the way that we move money. So, how do you actually, people who've got Aussie dollars who want to get it into the US, well, how do we actually go and make that a faster, more seamless experience for people? How do we, if people want to get it in, if it's now, 3:30 in the afternoon and you want to go and get your money in before the market opens, we can do that for you, right? You can't do that if you go to a bank. So those are the sort of things that we look at, is how do we actually make that a better experience? Then what we do is we look at the whole investing experience, and we benchmark ourselves against others. But it's also you want to go at how do we actually go and continually evolve our core buying and selling journey, because that's really what the crux of what everybody does. You can go and make it the best experience to go and onboard, but if your core experience is rubbish, then nobody's going to use it. So that's really the things that we look at in terms of other products and services that we do. We then look at, well, what are things that people are asking for? So we've recently announced that we'll be launching ASX later this year, and we announced, we had a big announcement yesterday around our pricing, which is pretty innovative. Again, I think pricing can be innovative, but it's aggressive. And that was born from, well, customers, they love Stake, they love what it brings for the US market, but you know what? I've actually got my existing incumbent broker for the ASX, and I don't necessarily I want everything to be managed in one place. Well, so by adding ASX, we can suddenly solve that problem, both in terms of, allowing our existing customers who three quarters of whom invest in the ASX as well, so they can go and bring across their ASX platform, but also other people who wouldn't necessarily have been using us up till now, they can come on board. So that's really what we do. Is it's just it's an evolution, just working through with customers and feedback.
100%. So Dan, when we were chatting beforehand, you sort of briefly touched on the GameStop experience and how that was quite a trying time for the business and the leadership team, and it was pretty intense. Talk me through, firstly, for the listeners that don't know about GameStop, which I don't think there are many. I'm guessing most of our listeners will know about the GameStop, but maybe just a very, very quick summary of, through your eyes, what the experience was of the GameStop shenanigans for you guys, how that affected the business at Stake, and how you guys got through it, because that was a pretty trying time for you guys, for many businesses in the space. So maybe, just start with a quick summary, like this is what happened with GameStop through my eyes, and then tell me about sort of how you experienced that through the eyes of Stake.
Sure. So I think really what was happening in the market was obviously during COVID, there was a lot of uncertainty across the whole space, across every industry. But what we found is very quickly is that the retail investing that started to have a bit of a boon, because people were at home. They had potentially had more time on their hands. They had less certainty over their futures or their job security. And so they wanted to take more control of managing their money and investing for their future. So what we found is that there was a significant uplift in new customers coming on board and being engaged with Stake and platforms like Stake, where so they could take more control. And that really escalated quite significantly into late January, early February, when there was really the GameStop saga. There's a lot of customers coming in and buying the meme stocks, and really it was a turbulent time. That was 100% what it was like, but it was also company transformational. It was industry transformational, company transformational, because you've now had all these new people in the market and customers that previously may not have even considered investing that actually got onto the bandwagon. So we see that it was an amazing, seismic time in the whole industry, where there was this whole revolution of people coming on board who may never have bought a stock before in their lives, that were actually realizing, well, this is an opportunity for me to go and take more control of my money. So that's really what happened. And for us, as I said, it was really amazing that, the addressable market increased significantly. But what that did is it put a huge amount of pressure on us as a business in the short term. We had, significant uplift in volumes, both in terms of new customers, existing customers coming back on board, trades that were placed. We had expectations around volumes, and they were blown through the roof, to be honest, in terms of from our database. So it was a really trying time for us as a business, and we did have intermittent outages throughout that period. But it was a time when we got through it, and we realized that for us to go and be a long-term sustainable business, that there was a lot that we needed to do to support the underlying growth of the business. So whether that's in terms of new talent we needed to bring on, increasing our infrastructure, rewriting a lot of code, improving our customer service. And really the outcome from all of that was really we then went to market to raise more money in May, which was shortly after the whole situation happened, with a view that we could go and invest in this business in the long term. So that was really the driver for the capital raise that we did earlier this year.
Yeah, I was just about to ask that. As you were saying that, it's sort of you need to be well capitalized to go and resource up like that to do what you need to do. But I guess the narrative is pretty good. You can go to investor and go, look at this. We've got absolute traction here. We need to be able to service this. We need to be capitalized to service this. And it must have been super exciting to nerve-wracking and terrifying, but super exciting to live through that as well. As you said, you guys sound like you know how to handle some high pressure, so that's good. So Dan, I'm conscious of time, so I want to kind of ask one more longer form question and then move on to sort of quicker rapid fire questions. So, in the investment space, you guys are investing in, you're opening up the ability to invest from outside of the US into the US stock markets. But I'd be remiss if I didn't ask you about how you're thinking about crypto. So, I wouldn't necessarily say crypto and stocks have become synonymous, but they're getting close, depending on what generation you're speaking to and what sectors you're speaking to. How are you thinking about crypto in the context of Stake? Are you thinking about it as a challenge to your industry? Are you thinking about it as an opportunity and just part of a suite of investment products that you'll add and build into the product in future? Are you thinking about stable coins to maybe do cross-border remittances or payments or moving of money more efficiently and building your own stable coins? And it's totally fine. Look, if you can't answer the stuff, if it's secret and IP, that's totally fine. But, are you comfortable speaking about how you're looking at crypto? And if you are, tell us how you're thinking about crypto.
Yeah, sure. I think first of all, we see everything as an opportunity. So even if it's a challenge because somebody else is doing it and potentially doing it better. Well, great. Like from an industry perspective, that's great that there's progress. So that's sort of how we view things generally. If we're unable to do it or we haven't thought of it and somebody else is doing it, then that's good. That's great. We can learn from it as well. So in terms of how we're actually viewing it, I think the first thing is that our core business is about is a retail investing platform. Okay, so for us, a lot of people who come onto Stake, they're looking to buy and sell assets. US being the main asset at the moment, but with ASX coming on board, so we do get customer requests for crypto, unsurprisingly, and for us, really, it would be like, okay, how would that add to what we're doing? Well, it would probably make sense to be around, okay, how do I actually go and convert cash and store it in crypto? So that would be at face value how we'd look at it. But to be honest, it's very early days in the whole space and for us as well. Yeah. So in terms of how actually looking at it from more of a back end and whether it's on money transfers, that's not something that we're sort of like strongly looking at. I'm very interested in the space because we've obviously been in the international money movement for a long time now. So I'm really interested to see how it's progressing. But it's something that we're sort of looking at from afar.
Yeah, it's kind of interesting. Every single fintech founder I speak to, whether they're involved in blockchain or not, there isn't one single founder that says we're not looking at it. A lot of them are either building into it or at a minimum saying, look, we're not building yet, but it would be kind of silly not to keep a very close eye on this. So I think it's getting closer and closer to some form of mainstream adoption. So I want to move to some more rapid fire questions because I'm conscious of time. So these are just sort of quick questions, quick answers. So the first one is, what scares you in business, Dan?
What scares me?
Yeah.
The biggest challenge I suppose I have would be just around customers and like, are we continuing to get customers on board? Are we able to service them? Are we giving them what they want? Because the last thing we want to be doing is being an irrelevance.
Right.
That's probably the biggest thing.
What content are you currently consuming?
Personally?
Yeah. Business, personal, whatever. What content are you currently consuming?
I'm reading a couple of books. So we're going through Traction. It's one of the things. So how you manage the business. You got it up on the shelf.
We've been a Traction organization for years. It's we can nerd out about that if you want offline. It's incredibly powerful. We implemented it years ago. I've actually helped a few businesses implement it. It's incredibly powerful stuff. So keep going with that. You'll get value for sure.
No, good. I was going through some of the worksheets at the moment. And then the other one, reading Stillness is the Key as well.
Oh, yeah.
So that's the couple of books that I'm reading at the moment.
Yeah, that's Ryan Holiday, I think.
Yes.
So I have his Daily Stoic book, which I read every morning, and I've read Obstacle is the Way probably, 10 times. Fantastic stuff. Very aligned on that small reading list. What's the last book that you read cover to cover?
Probably The Hard Thing About Hard Things.
Oh, Ben Horowitz, so good. Yeah, I definitely align with your reading list so far. That's good stuff. Then Dan, what is something that you're going to be doing in the next 7 days to improve yourself or your craft?
I've recently got back into running. I'm trying to go 3 or 4 times a week. So it's making me probably a better person.
For sure. My wife will often tell me when I'm being a dickhead, she'll just be like, just go do some exercise, Mike, please. Like, you're being a dickhead. Because it's true. I'm just not a great human when I'm not exercising. So I feel you. Dan, we've bounced around a lot today, which is great. That's what I like to do. But of everything we've spoken about today, what is the one thing that you would want the listeners to leave with from today's discussion?
Sorry. Other than my daughter in the background here.
It's totally standard to have kids running into the podcast. It's totally standard.
I think it's probably more around just following your passion. I think that's probably the main thing, to be honest. Like, I've been very fortunate to be able to do that. And I know, you okay? Okay, sorry.
It's totally cool. This is the new normal. That's what I love about it. I have a 6-year-old daughter. I'm surprised, she hasn't run through yet. So it's all good. It's standard.
I shouldn't have done this at home time after school. So I think it's just about following the passion. I as I said, I was extremely lucky that I was able to do that and pursue it. And I know that it's a privilege as well to be able to do that. I don't take that for granted. But that's something that, honestly, in terms of you only got a short amount of time on this earth. You got to make the most of it, and don't let it slide.
Dan, it's been awesome. I think for me, what's jumping out from this conversation is you didn't say these words, but it's the way that I'm interpreting it, is just that continual, very deliberate decision-making process around what to build and what to do and what to focus on. It sounds to me like you're as focused now that you've raised $40 million as you were when you were bootstrapping this with really limited resources. And I think that discipline is an incredibly rare and incredibly valuable thing. You haven't said that, I'm putting words in your mouth, but that's what I'm sort of taking from you, and it's hugely valuable. Dan, do you like to be contacted or followed? And if you do, how can the listeners best contact or follow you?
Yeah. Sure. Probably on LinkedIn's probably the best for me.
Cool. It's Dan Silver, which is like a movie star name. So, you can't forget that name. It's a pretty cool name, Dan.
Thank my parents for that.
Dan, thanks so much for making the time. It's been super cool. Well done for the progress so far. And I'd love to get you on probably another 6 to 9 months and see how you guys are taking over the world with what you're doing. I appreciate you making the time and sharing your journey and your insights.
Great. Thanks, Mike. Great to talk.
And to the listeners, thanks for listening. If you would like to discuss your fintech or blockchain project with us, you're welcome to book a call with one of our principals at www.nona.digital. And I'll be back next week with another episode to explore the Fintech Founder Journey.